Good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, March the 20th already. We're at March 20. Market's been in an uptrend for quite some time. We got a strong pullback day on Thursday, an uncertain doji day yesterday, right? That's what that red plus looks like up here. It's an uncertain day, so we're still in a directional uptrend, and we don't see any signs of significant weakness in the market. The major support line the technicians are going to use is really going to be way down at 37.50. And the reason is that's the 100 simple moving average line. If you take a look at our, and I connect the dots here, you can see that lines up at 37.50. So up here, it's going to be an uncertain zone. We do want to start lightening up on equities, going to cash, maybe buying puts and flipping into inverses if market, in other words, going short the market and getting out of the market if we lose the 50 simple moving average line right near 38.60. So that's, but what happens every single time? Every single time we lose the 50 SMA, it comes back to life. We lose that 50 SMA, market comes back to life. So we would expect that to occur yet again. So we don't want to be aggressively short or start to go to cash and flip into a inverse short bias unless we lose this level here. And that's unlikely to occur next week, but do just remember that. Use the 100 SMA. The 50 SMA is an initial S1. The 100 SMA is major support, and resistance is obviously right near 4,000. We take a quick look at our VIX. We do see a bullish engulfing occurred during Thursday's market drop, and so that's why we're pivoting back up into the previous range. But again, major resistance is up here near 26. First R1 is going to be where these two lines converge right under 24. So we want to start looking for bearish divergence in the market if the VIX flips over 24, and especially if it gets north of 26. So let's look at some Rockstar charts. We'll start with one that one of my smart traders had mentioned last week or week before, I believe it was. Philip Morris is a really nice uptrending chart. Cough, cough, inside joke. Well, now it's called Altria, but the ticker MO still reminds me of Philip Morris. They changed their name. Anyway, MO looks especially good with the breakout running all the way from recently from 45 up to just over the 50. You notice we had the stall right under 50, right, for several days there. You should always expect that under decade values or multiples of 10, you'll get a slowdown, if not an outright reversal or pullback. In this case, it did get new buyers, so Altria is looking really good up here if it breaks 51 next week. Let's go through our charts. Actually, let's continue on with the theme of reopening stocks, and then we'll look at others. DraftKings continues to grind higher. It's not a high volatility chart, but it's a nice steady uptrender, and it should be a core holding for anybody. You're not making trading advice or recommendations. This is all for educational use only. Consult with the registered investment advisor before you trade anything. But the point is, DraftKings, a good play for anybody looking to engage in the gaming sector. My favorite casino stock has always been MGM for the last decade. I remember trading it off 6, but way back in the old days. But anyway, MGM, a really nice breakout. It had been around 30 a share for much of last year, late last year and early this year. But it finally broke that range the last 8 weeks, going from 30 to 40. So it's on the move, and reopening plays casino stocks, your airline stocks like Southwest. I love this love chart, right? LUV ran all the way from 47, 48 up to just over 60. So of the airline stocks, I like Southwest the best. LUV looks spectacular, way up at 62 a share. I remember when it was back in the 30s, and now it's up in the 60s, starting to get in the 60s. So Southwest is up, as is Carnival Cruise Lines. Trying to sail out of the port here. We don't know if we have stormy weather ahead, but we've got clear sailing if we break the 30. So we'll see if Carnival is able to break 30. And again, this is a good example of the strategy that I published in Stocks and Commodities magazine of never buy 9s, right? We never buy anything with a 9 because it usually stalls right under the multiple of 10 price point. And that's been the case here for the whole month of March with Carnival Cruise Lines. But it's still in an uptrend. So an uptrend's an uptrend's an uptrend. So if it breaks over 30, maybe 30.5 or so, I'd be looking for a long play in Carnival Cruise Lines. So those are reopening plays. Carnival, Southwest Airlines, flying into the sky up here. We'll see if he breaks 63. MGM, I'll take that bet. If we break 42, we'll see if this gets its game on with a continuous move. Really nice doubling, right? It had been 21 a share, and now it's up at 42. Anyway, MGM and kind of a slower but steadier uptrend grinder is DraftKings. Of all of those 4 charts, Southwest is the best. It's got the cleanest, strongest directional 45-degree angle breakout, right? So a really good breakout chart. Now let's move into a couple of commodity plays. Something I learned from Jim Cramer is he had said lumber had doubled over the last year. One of my traders, Kenan, had mentioned that he said it even tripled. So lumber's been on quite the run. And one way to play that is the lumber ETFs, which, and I kid you not, they're actually called wood. What a chart. And cut. I thought cut might be the inverse, but it's not. It's also obviously a directional long play. But the lumber ETFs, wood and cut, for those of you who play commodities, both pretty much identical charts. Cut's half as expensive, so maybe a better play. But anyway, lumber's up, so no reason to look for any weakness in that. If it does break new highs north of that shooting star on Thursday, if it gets over, I'd wait for it to break the nearest whole number over 37. CUT may be a good lumber play moving forward. And for context, look at the 1-year chart. It looks, this is a 6-month chart. The 1-year chart looks even more impressive because it's a really big sweep up. Copper continues to move up, but it's stalled. Most of the metals kind of slowed down lately. Copper and silver, and to a lesser degree, things like platinum have been moving up, and gold has been in motion lately too, but not, how to say, it hasn't taken out new highs lately. Kind of like that song, what have you done for me lately? Well, copper, not so much. But because it's in a big uptrend, we do want to keep it on the radar if it gets over 40 sometime in the next few weeks. But Freeport McMoran, our top copper pick. And on the flip side of things, the star is another good one. And then we'll look at a couple on the flip side of things next. But STAR, another spectacular runner going from 12 to 18. This one looks really good if it breaks 1850, right? It's a really good steady uptrend. One thing that you want to do as a trader is make sure that you match to the best of your ability, kind of match or fit the types of instruments you trade to your experience level and risk tolerance. You know, things like this are relative, I won't say low risk, but it's less risky than some of the wild things like GameStop, right? As an active trader, you want to focus on charts that are steady uptrenders that slowly grind higher. Like MGM is a nice steady uptrender. Southwest has more volatility, so this would be for more intermediate or advanced traders because both the risk and the reward are elevated. You've got higher reward potential, but also higher risk because the point range is relatively wide, right? So this would not be for, I would say this would not be for newer traders. Newer traders would want to stick to your things like your Carnivals, your STARs, charts with more steady, gradual uptrends. Kind of like, I live here in Colorado, and it's a good example of skiing. This would be kind of like a bunny slope, right? Or something, you know, where it's not as volatile as something like Southwest, which would be for more experienced skiers. So you get yourself in trouble if you chase things that are running sharply without the experience to go with it. So do make sure that you kind of match your your trading style to your instruments that you're trading. Like Philip Morris, this would be good for intermediate or advanced traders for swing trading, but not so much for newer traders. You know, so anyway, it's a really good chart. I like that chart. Now let's flip into our intraday charts and we'll take a look at those right now. Crude oil, I bought a little bit of SCO, but I sold some of it back yesterday during the drop. But I still want to work into a position. My cost basis had been 649 and it spiked up nicely, right? All the way up here. When Steve and I were doing our webinar, it was back here and I said, it'd be a good end of day runner, and boom, flawless victory. It was. But yesterday, oh no, it came back down. So anyway, this is how to short crude oil. And on Thursday's massive drop in crude, or SCO ETF skyrocketed, well, baby skyrocketed from 640 to 760. Anyway, lots of upside in this chart, so I'm going to scale into this, especially if it takes out new highs over 7.5 in the upcoming week ahead. And of all the inverse markets out there, or all the inverse ETFs of the 4 markets, the Dow and finance showed some weakness yesterday. It had been NASDAQ had been weak, right? So Qs / S triple Q is the way to play the short NASDAQ. The Dow was weak yesterday, so for that reason I scaled into some S-Dow yesterday for a swing. So I'm holding this one as well as other inverse ETFs like TZA, the small cap, and S triple Q, the NASDAQ inverse as well. And just a few $1,000 worth. I'm not going wild with my inverses yet, but if they do drop, this is a really good example of a day over day, 2-day high breakout chart. And this is how to short the Dow, right? The Dow showed weakness for the first time in quite some time. Dow had been kind of the holdout, showing strength in face of weakness in the S&P and especially in the NASDAQ, but it's rotating, it's spreading market weakness across the sectors and finally hit the Dow yesterday. So for that reason, we want to look at playing things like our short Dow inverse ETF if it does take out new highs, say over 1020 next week. So that's another play. And again, we cover all this for our members in the live room. So if you're not yet a live room member, you might want to join up for an intelligent approach. Speaking of intelligent approaches, one of my smart traders, Wendy, had mentioned this chart, Clovis Oncology yesterday, CLVS. Look how far it ran. Now my traders get what's called an answer key each morning, and this is the actual answer key sheet that my live room members were privy to yesterday. Top secret stuff here. And before, she had mentioned it cleverly, smartly when it was back down here near 620 or so. And I said in market would go for a long if it breaks over 660. So I gave my traders at least half an hour notice that 660 would be a good inflection point for a long trigger in CLVS, and it ran all the way up to 840, and our final exit call was at 820, so it ran over 2 points, or I should have 1.5 points, I should say, for our live room members, from 660 to, on the day it ran to 860, but on the morning open range breakout it ran all the way to 840. So I don't know how helpful that would be, but you know, I've gotten great feedback from traders that appreciate having specific entry triggers identified for the high volatility charts each morning ahead of the opening bell. So that gives you, what that does for you is a couple of things. One is it gives you not only a watch list, but a specific trading plan for identifying exact technical entry triggers, all designed to teach you the chart patterns that have the best momentum or the best directional volatility. And it's not, you know, unlike every other room out there, we don't just talk about charts like a talking head. Oh, it's going up. Is anyone trading it? That's useless, right? Or, well, next to useless. It's not completely useless, but it's much more useful if somebody, I think, gives you exact entry triggers before the opening bell as to where to go freaking into the instrument, right? That makes a big difference. That's why my room's been so popular and we're up at record high subscriber growth this past 3 weeks. So anyway, that was a good best chart of the week example, or one of the best charts of the week example was the Clovis call at 660 yesterday. Now I didn't get the bottom, which was 6. I didn't get the top, which was 840, but I got close. The exit call was up at 820 because I knew that $8 a share was kind of extended. So I said, hey, we'll get out of this guy if it drops to 820. When it was up here, when it was still skyrocketing up, I said, trail a stop. I always tell traders how to trail stops on the way up. So, when it's here at 720, I said, we sell it all if it loses 7, et cetera, et cetera. And as I run up, I tell traders live in real time exactly how to trail a stop on an open position. And it's very instructive. It's a really good way to learn how to make the most of these charts. Let's take a look at a couple others. What else was hot? Most of the others are kind of random hotness or random heat. Excuse me, TCAT was on the radar because of Thursday's price action. Friday was kind of choppy and haphazard. This is a good example of a pre-market runner and in-market dropper, right? This thing ran all the way from $1.50 to 3 and then pulled back down to 2.25. Never did really do much of a bounce. My initial long call was way up at 330 and I never did tighten that down correctly because it never did bounce much. So SNES, I traded that one myself over 240, but I got out just back under 250 because it didn't run up out, too much. I bought that first little bounce in the early afternoon. I believe it was, it's either 220 or 240. But anyway, this guy ran up a little bit, but not much of a run. What I do like about this chart, though, is it did have big range, right? It went from $2 pre-market. This is in the wee hours of the morning at 5 a.m. It ran from 2 all the way up to over 4.5. It pulled all the way back down, and in market, it just kind of dropped and finally made a valiant attempt at a bounce, but then just came back down to trading range and closed sideways. These are the kind of charts we like to cover for our members in the live room. KOPN, somebody had asked about that one, and that's a really good breakout runner. Thanks. Someone just asked about that today, right? This was one that someone asked about this morning. A lot of comments. Thanks, everyone. So thanks for asking about that. Yeah, that's absolutely tradable. It's who can name that chart pattern? It looks like a engulfing pattern, right? It started from below the previous day's low, traversed the entire trading range, and ended up at the 2-day high up near 11.25. So trading aftermarket 11.14. Anyway, KOPN, that's a good chart. So thanks to whoever asked about that one. That's a good chart. Yeah, good point about FAZ. It did another reverse split. That's not a good sign when things do reverse split, but because banking and finance were weak yesterday, FAZ is on the radar for a potential upcoming move next week as well. Our finance bear ETF. This is the only reason I didn't trade it much is because the volume isn't there. So I prefer that style chart because the volume and volatility are starting to pick up. I'm going through some examples of the types of intraday charts that we like to cover, right? We had a nice move on Thursday in this guy, so we followed it yesterday. It didn't really do much yesterday, and it highlights a good technique or a good tip. That's the day after a big move. Often the day following the move is kind of a non-event, kind of like the day after a large gap is often a pullback or a mean reversion. 50% retracement, it goes sideways, doesn't do much, but it's still worth keeping on the radar for next week because of the previous volatility it had on Thursday, going from 5 to 13. That's huge, right? Look at that range, it nearly tripled, going from 5 to 13.50. So it over doubled on a run up on Thursday, didn't do much of anything yesterday, but often they cycle, right? They go back and forth. They may start off strong on one day, they do kind of resting day, kind of inhale and exhale, kind of exercising. It works up a sweat and does a lot of exercise on one day and takes a break the next day. And then on Monday or Tuesday, it lights up again. So that's why it makes sense to follow these charts and see where they're headed. FSR had a little bit of a pop pre-market, and it ran sideways, didn't do too much in market. The big play of yesterday was Clovis because of a really good range. So anyway, those are the type of day trading charts we like to cover for our members in the live room as well. By the way, market internal that you always want to follow is the ARMS index, also known as the trend. It started off wildly bearish in the early portion of the morning, but got quiet towards the end of the day here. So, but do keep an eye on the trend. We follow the trend in the VIX in the live room. Those are market internal indicators. Any good professional day trader worth their salt knows like the back of their hand, and we do too. So we always follow the trend and the VIX to look at volatility and directional bias, whether it's long or short in the market. Another quick tip, you want to follow the spiders. If you don't have a futures E-mini ES feed, you do want to follow the S&P ETF SPY, because unlike the S&P, being an index, it doesn't show you anything pre-market, but the spiders does. So that's a good professional tip, is make sure you do follow something related to the index you're trading. I like following the spiders ETF pre-market because it shows me the gap in the direction or lack of direction, as was the case yesterday morning, preceding the initial drop and then the bounce that we saw in yesterday's trading session. And of course, that looks like a good directional uptrend as well. All right, so with that, I think we're going to wrap up for this session. I'm going to end a few minutes early. I don't have too much else to follow up with you guys for, so I hope that helps, and wanted to thank you, right? I don't want to sit here and keep talking if I don't have anything to say. So I said my piece. These are some of the best charts. I like Southwest. I like Altria. I like Star. That's a really good chart, by the way. I love that one. That one's very appealing. This would be a good one potentially for a newer trader because the range isn't huge, but the volatility is enough over time where for a swing trader, a longer term trade, it has a good directional uptrend that's continuous and reasonably strong. Now it's kind of a double top here near 18.5, so we don't want to go long unless it breaks over 1850. But at least I tried to hammer out a bottom on that first pivot and bounce back. So we'll see if it takes out new highs as well. And just a reminder, if you're not yet a member of my live room, do give it a try. We like to, really good teamwork, really good collaboration with so many folks who are smart traders, as well as new traders, right? Traders of all experience level are certainly welcome. And I endeavor to do my best to try and help, answer questions, give specific feedback. People ask about charts and we pull them up together as a team. And oftentimes some of the day's best charts come from my traders, like John and Wendy and Barry and so many others, and Mick and so many people who have really good, and Kenan, lots of good traders in the room too that post charts that we pull up together. So really good community of like-minded traders. So if you've had it with the cheap, low float, stocks that pop and drop and don't have the same kind of momentum that you may see elsewhere, you may want to try my Trading Open Room. I've been running it since the year 2000, so one of the longest running rooms in the history of the trading industry here, over 2 decades now, with thousands trained. So thanks so much for being here. Appreciate it, folks. And I will see you next time. So we covered swing trading charts on the daily charts and intraday charts. Clovis was the hottest one of the line yesterday. So anyway, good stuff. Thanks for being here. I appreciate it. And I'll see y'all next same time next week. Bye for now.